Hello, this week we are going to discuss my predictions for 2021. It's a 6-month report. So, if you want to learn about property prices, Bitcoin, gold, and even things like the virus, then stay tuned and we will see how I am doing this year.
Wow, that sounded really serious.
My name's Gary Freeman. I'm a former lawyer and now investor and financial educator.
And I'm Ronnie Freeman, a property designer, developer, artist, and that's it for now. And we're here to teach you about finance and investing. We will start with our news story of the week.
And this week, the rich are getting richer, officially.
That's not news. It's always.
Yeah. This is the Sunday Times rich list, where the number of billionaires has gone up by its highest total ever.
In a year.
In a year, it's jumped up 24 to 171 billionaires now in the UK.
In the UK? Oh wow!
In the UK.
I thought that was the world.
No, that's the UK. And do you want to know the total?
The total we have altogether.
Yeah, it's probably not as high as you think.
How many billions in a trillion?
Oh, I don't even know.
Oh,
We've got
right.
100. 600 billion overall we've got cumulatively, a bit less, and there's 171 of them. I think it's the UK.
So they're averaging on 4 billion each. It's all right. I'd take it.
So they're doing well, basically.
How does, you probably don't know the answer, how do our billionaires per population compare to...
Pass. I don't know.
Okay. We could have a whole...
You can check.
We can have a billionaire podcast.
We can. I reckon sort of lower than like Dubai, but I don't know. Maybe that could be your little pet task for next week. Sorry. Right. So we're now going to discuss my predictions for this year and see how well I'm getting on. There's some good, there's some bad, and there's going to be some new ones as well. We're just going to start with the rest.
Wait.
Oh, go on.
This time next year, put a note in your calendar.
Well, we're not going to be on the billionaire list. Is that what you're going to say?
No,
right, something else.
We should do a repeat podcast.
Yeah.
Go for each of your predictions, and you're either really clever or a bit silly.
Yeah, well, that's what we're going to do at the end of the year first, and then...
The end of the year.
Well, this is only 6 months in, so I did these predictions at the start.
Oh,
of this year.
you did these?
I did these.
Oh,
These are my predictions.
These were your new predictions.
No, these are my predictions from 6. So
we're doing a podcast on it, so you must be right.
No, not that right. Some right, a bit right. The main one's right. Right.
You're not going to make a fool of yourself.
Right, let's start. Property prices. This is the most important because this is kind of our genre.
Shall I read?
No, so I said.
I was reading.
Yeah, but I've remembered most of them anyway, so you could just look pretty. I said that prices would go up by at least 5% in this calendar year. Okay, so prices were already going up towards the end of last year, so it was quite a bold move. You might remember from our episode a couple of weeks ago when we discussed all the media headlines, which were saying prices are doomed for 2021.
And he quoted himself.
Yeah,
not many people quote themselves.
No, but anyway, there was all the media was saying prices will fall in 2021. I don't think there were any experts out there calling for a rise. Some of them were saying the rise might be for another month or two, but they were all saying a big drop. I decided to go the opposite. I said prices will go up by at least 5%. Year to date from January so far. Prices have gone up between 5 and 6% in the 5 months of the year. No, it's been 6, but the data isn't out for June.
Right, I'm giving you marks out of 10.
Well, we will do this, I think, at the end of the year because it's only just you can, if you want, you can do marks, but we are on track anyway for getting the first one right because I actually think prices are going to accelerate and not decelerate. Lots of people are fearful that the stamp duty holiday will come to an end and there will be a crash. A lot of people are also saying the end of furlough will lead to a crash, although there's now only 2 million people, I think, left on furlough.
Only?
It's still crazy numbers and the government's still pumping a fortune into the policy.
So 2 million people have been on furlough this whole time.
Yeah, well, yeah, I think they can dip in and out, but potentially.
Cool. Nice holiday.
But there used to be some people might not see
not
it as
nice.
that. But there were I think 8 million people. So it's come down a lot. And even when they do slip out of furlough, hopefully there's now actually a lot of jobs available. So
Is there?
yeah, in fact, people can't even recruit at the moment because people are enjoying furlough apparently too much. And no, seriously. So there are people are now. That's why one of the reasons my wages are going up, because they're going to actually have to attract people into employment. I think a lot of people have become enjoying the freedom of not getting not having a job, and
I've got to not watch Netflix and not get paid for it.
So I genuinely think there's now a struggle of recruiting, but maybe we'll touch on that on another episode. But yeah, the point being for now is that I don't think those issues will derail the housing pricing, the house price situation, and I think at the very least we'll stay where we are now, sort of 5-6%. But I wouldn't be surprised if this year we will go to 10%.
Okay, you're going to have to hurry up on each point.
Okay, well that was the main point.
Okay.
Number 2 is that rents will stay fairly static. Again, a lot of those reports were saying that rents will fall as well. They did in London last year quite dramatically, and they are still falling in London. Well, they have recovered in the last month or so. But across the board, they're actually up about 3%. Roughly in line with inflation, which is what rents tend to do. So
you were wrong.
Right. Not.
You said stay
I said fairly static. I'm saying because actually on an average it's about 1.5%. So I'm saying that's fairly static.
1.5 average.
Overall, yeah, it's fairly static.
Saying,
I'm saying it's fairly static.
What? So if you divide the 3% rise in the rest of the country minus.
Well, with 9% in London, minus 9, it's minus 9% in London. So across the board, it's about 1.5%. So far, so good. No wild swings in rent, which again is what they were predicting. So
you're right with number 2.
We're 2 for 2. Stock markets, I said, would go higher. I said there might be a small correction, but I said overall they will go higher. Well, we've had no correction. They've gradually gone higher and higher, and overall the world indices are on average up about 13%.
Gary Freeman, the
so
psychic.
That's working out very nicely. If you'd have just put your money in a general world index fund or what have you, and you would be up in the region of somewhere between 10 and 15%, which is obviously a fantastic return.
Should they put in now then if they haven't already?
I can't call what's going to happen on any given week.
This
was a year ago. If I was to predict, I'd say I still think there might be a correction towards the end of the year. So actually this might all go to pot, because the correction might be 10%, and so it's suddenly we might come back down to kind of where we started the year at. But I don't see this huge melt up yet. I think it might happen, but
when
maybe
you say
in a few
it, right?
years. Yeah.
You go. I don't see it.
This is not Mystic Meg territory.
You do add to the drama.
Yeah, you could do that, but I'm going to say stock markets or sort of carry on a sort of that trajectory for the rest of the year. So kind of going up sort of steadily, and we may see a correction towards the end of the year, but possibly limited to certain sectors, for example technology. So that's 3 out of 3. 4, the next one is where things go a teeny bit wrong, which is I said that the gold and silver and other sort of metals and commodities would go up. Now this was very broad when I did this at the time. Now commodities have gone up. We've talked about commodities are things like all the metals are things like copper, and then commodities are things like I think tin. Well, I'm not sure whether that's classed as another metal, but even things like food, like sugar,
right,
and everything else really that like coffee, other things that you can buy basically, which aren't sort of gold and silver. I mean, gold and silver is a commodity, but I said across the board they would all go up. That's kind of where I was hedging towards, and some have. There has been some pullback in the last sort of few weeks, but they all have gone up. Gold and silver though haven't. They've stayed very static. Gold at about $1,700 and silver about $26. I said they would go up, and this is getting a bit complicated, but I said they would go up because I thought there'd be inflation, and usually when there's inflation, gold and silver go up, essentially because gold and silver store their value as against the value of the dollar, which is going down because they're printing more and more. That was the theory. it's not happened yet. I think because people are seeing the value in other assets still. So because stock markets are going up and up still, people aren't thinking, oh, I want to protect my money yet and put it into gold. And so that might happen. I think when there's more inflation is creeping up. But I think when there's a bit more and a bit more, which I think might happen towards the end of the year, then gold should actually rise. And I think we might still get there by the end of the year. Other commodities have gone up, so I think we're about halfway on that one, and we'll see where we get to.
I'm not doing half points.
We'll see where we get to at the end of the year.
It's a cross.
The next point was that the dollar would go down, and this was almost the opposite to saying that gold would go up. And again, the value of the dollar has gone down because they keep printing money, but the dollar index, which is basically how it's compared to the rest of the other currencies in the world, hasn't dramatically gone down yet. It's pretty static. So let's see where we get to. As I said, the value of the dollar is going down, not again as dramatic as I would have thought.
Giving you a cross.
Let's see where we get to. That dealt with kind of quite a lot of the finance stuff, and then branched out and probably took a bit of a gamble with other things and talking about the virus. And I said that peak testing would basically continue for the duration of the year, and this is still looking very good. You now have to basically take a test all the time, and looks like
it's going up. It's not even like
it dropped off a bit, obviously, when everyone thought the virus was going. But anyone who's listened to your variant song knows that there's now variants knocking at our door, and cases obviously going up, and that means testing is basically going up. And you now need a test if you want to go on a plane, but also kind of just going to concert or what have you, and I think it's going to be here to stay. So that one's a big tick, and thankfully I got the next one wrong, and I said there would be
thankfully
because I said there would be a delay to the vaccine rollout, and I said that the non-young vulnerables wouldn't get their vaccines until 2023, and that has not happened. We are
both been vaccinated.
We've both been vaccinated, both had our first. And obviously a lot of our peers have, and they're now starting to vaccinate. I think everyone above the age of 18, so it looks like they're going to get there, certainly by this year. My main rationale was that I thought they would start giving another jab to the vulnerables before they gave to the non-vulnerables, and it looks like the vulnerables will get another jab, a third jab. But
a third?
Yeah, that was my logic, that they would all jump the queue basically, and they wouldn't be able to do everyone, but they've obviously hurried along the process. I also thought there'd be a lot more pressure to vaccinate the rest of the world's vulnerables before us.
Really.
And
we're just too rich, aren't we?
Yeah, so we can't turn this into a political show, but that was where my head was at. I actually thought there would be a big collective community to say, right, let's vaccinate big parts of Africa and India and what have you.
No, too selfish.
The older people in that country, so who are possibly more pressing than say the likes of us to get vaccinated. But obviously that never happened, and they pressed on, and that's where we are. So thankfully, that one is wrong. Obviously not thankfully, the virus is still with us.
And not thankfully for Africa.
And not thankfully, but a big cross. And actually, we're going to take this one out of the list, so we won't talk about this at the end of the year because it's now been done. The next one I said was that working from the office would become the new norm again. I said apart from Fridays. And dress code would become less formal. But again, as it stands, this is obviously wrong. No one is back in the office. We're all still in our houses. But I still think this will change. I think people will go back to the office. I think there's employers will start to put pressure on the government to say they need their employees back to regain sort of that element of control. So I'm sticking by this one, although at the moment this looks like it could be dramatically wrong. But let's see how we get on. The next one has already been right, so this is also going to come off the list. And this was that governments would start to clamp down on the huge tech companies, so Facebook, Amazon, Alibaba in China, and that's already happened.
Clamp down doing what?
On basically they've got too much power. And my prediction was that we would start this year to see a turnaround in that they would no longer just be able to do what they like. And there's been two big incidents that's happened this year that makes me think this is already right, and we're already on that kind of trend. Now they will retain so much power, so don't start feeling sorry for them. But The first one happened literally within a day of me making this prediction, and this was a guy called Jack Ma, who is the CEO of Alibaba, which is a huge sort of Chinese, call it conglomerate. It basically does everything, but essentially mainly retail, but it's one of the biggest companies in China. And he's a very influential figure, and he made a speech in China that basically criticised the Chinese government. One of his companies, a payment company, was about to go public, so you could start buying shares in it, and it was going to be the biggest, what they call IPO, initial public offering ever, and it got pulled, and he disappeared because, well, he survived.
Oh, I thought he was dead.
No,
you told me.
No, not dead. No, they thought he might be dead. He's not. He's fine.
If you think that's what
No, he went disappeared
right,
for 2 months. What? Tell you?
Yeah,
well, I didn't think you knew. Okay, I didn't know you knew.
You told me about
okay.
it, and he said,
Sorry.
I think the government killed him.
Right, I apologize.
But then you should have backtracked.
I should have given you the answer.
Kill him, Ronnie.
Yeah, I should have given you the answer
I've
when
been
when
having
he
nightmares
resurfaced.
about the government ever since.
Okay, sorry. He turned up on a golf course, but he has kept a lot lower profile. We've never had the IPO, and he's not said a bad word about the Chinese government since. And I think that's the first was obviously the sign of power of China, but it's a sign that these big media companies can't just get away with it. And the second one came only a matter of a couple of weeks ago, which was in the G7 conference, with basically the biggest 7 countries getting together, arguably the biggest 7. I mean, UK is in there, whether we still are or not, I don't know. Anyway, we hosted it, and interestingly enough, the virus rates have gone up dramatically in that area since they had that conference.
But, how many went?
Well, only the 7, but then obviously all their dignitaries and all that. So big team, all got mates, big teams. Anyway, so those top 7 decided they would start taxing the big big tech companies a lot more. I think the rate they agreed was 15%, although I think some of the detail hasn't been finalised yet.
15% from what?
From their profits. So at the moment they're paying like less than 1%. And basically, depending on where
the average worker has to pay.
Yeah, exactly. So that they kind of get away with a lot by saying that they're not actually performing the service in a given area. Well, now all these countries have come together to stop this happening, and I think they've basically anticipated what the big tech companies have said, and they will realise that this isn't so bad. The corporation tax, basically the tax the companies have to pay on their profits, is a lot higher than this in some countries. So I think they've kind of come up with almost a compromise, whereby they think these big tech companies won't mind. So it's a big indication that they're starting to clamp down. And so I think I'm already right on this one. I can't see much change in the next 6 months to kind of go the other way. So I think we'll drop this off the list. And then there's just 2 more where not much has happened. So I'd call them both a draw. I said that 5G would become a lot more prominent. The rollout would be a lot more extensive. I don't think that's quite happened massively yet. I think there's still talk about it.
So why is that a draw and not wrong?
Well, I think it might still happen. Okay, it's slightly wrong.
It's wrong.
Yeah, right, okay. And the next one is that lab-grown meat will start to become more popular.
Wrong.
Not that wrong. In Israel, they've opened up a lab-grown meat restaurant, which is booming.
Ooh.
Singapore have opened one up, but it's not quite grown to the level that I thought it might. So we're on track, but I think until the
I'll not mark that one.
No, at the moment it's a bit more.
Do you know you
expensive.
said it's 10 points,
Yeah.
but it's actually 11. Do you know you did number 2? You've got 2 number 2s.
2 twos. Okay, well, there's a
So it was out of 11, but we'll cross out the last one because we're indifferent to the results.
Yeah. So go on. What's the
1,
results?
2, 3, 4, 5. 5 out of 10.
Oh, 5 out of 10.
So you.
But I got the most important ones right, and that's kind of the rest I got a bit cocky. Well, like the ones that I like to think I know about, stock markets and property, and maybe I should.
Well, no, the first how many? The first 5.
The first 5 I think were all right.
Right,
4
so you got
right.
No, the first 3 were right.
Right, 3. Well, they're the most important. So that's.
So he only knows what he's talking about half the time.
Yeah.
You only listen to half our podcasts.
I'm going to, or switch off if I talk about things like the virus and lab-grown meats, because I'm just blagging it. I'm going to make 2 new predictions because we've taken 2 off the list, and they are that Bitcoin will drop below $20,000 at some point this year.
You're going to upset a lot of people saying
and then
that.
recover to at least above $30,000. So I think obviously we're in a low period for Bitcoin at the moment. It has crashed significantly from its highs, but I think it goes lower and then it goes higher, lower, higher, lower, higher. That's what it does. And I think that's what's going to happen, play out this year. And the next one, which is an interesting dialogue I have with a couple of my friends, which is the price of Tesla's stock. Tesla's stock, I think, is the most overpriced stock possibly in the world. Currently trading at about $650 US. It was at about 800, maybe 850. I think it's going to go below 500 this year, possibly lower. And that's it.
He's been saying this for a long time.
And it will happen. And maybe not this year, but at some point. I just think it's very, basically, I think it's very overpriced. So that it's all worked out on what they think future sales will be. And people are essentially betting on that. And it's currently based a prediction of 100 times its sales, which is a crazy amount. Most companies about 15 times its sales. So unless they suddenly take over the world in the next couple of years, I can't see that valuation is a fair one. And there you go, that's where we are. So it probably is a lesson to not necessarily take every expert's opinion on board, listen to what they've got to say.
And it might be a lesson not to publicly broadcast your predictions.
No, I like it because it's kind of holds you accountable. And
might only be interesting for you.
Well, we'll find out by how many people watch it. So please do subscribe if you enjoy the content. Please do give us a like. Write a comment if you think there should be a comment on one of the predictions. Maybe put in your own predictions on the comments. It'd be great to hear that. And tune in next week when we're going to discuss 10 ways for you to get started in investing in property.
Ooh.
Thank you very much.
Bye.
Bye-bye.